Let's get a video going. Gerald, go ahead and set the video up. We'll start with crude, then we'll go to gold. I'm going to go with the black charts first, show you how to trade what's called a shark bite trade. If you go to our website, you'll notice a big shark on there, and that's our emblem. Because of this setup I've been using since the 1990s. Still works today, and we'll go over that in a second. One sec. All right, Gerald's rolling on oil. All right, let's go over this. First, we'll go over these black charts, why we have them. Then we'll go over J signal on the exact trade we use on J signal. First of all, the black charts are very, very easy to trade off of. There's one setup called a number one trade. It called the exact high on crude oil this morning. Remember, I tell you guys and gals, get in here around 7:30, latest 7:45. Start watching the markets because we are futures traders. We're not stock traders. So you get some big moves in the futures market before the New York even opens up at 9:30. A lot of times you can be done by 9 a.m. to 9:30 in the morning before the New York, before stocks even open up. So a great move on the number one, my system called the high. Let me show you how we do it. Very simple with the black charts. Let's first go over the black charts. Then on this video, I want to go over J signal, how we take one trade off of that. There's only two setups you need to learn in this trade room, period. Only two. There's no other setup you need to learn. With the black charts, there's called a number one trade and a number three trade, okay? A number one and number three. What a number one tries to do, it tries to get a deep retracement with overall trend pullback. So what we're doing is we're looking for a retracement against the overall trend for a continuation of the trend, meaning when you first log in, you're going to look at these moving averages on the black chart. The most important is the magenta moving average. The angle is very, very important. And that's the same way with J signal. If you see the angles down, you know you're in a downtrend. So on the black charts too, you can't take any counter trend trades. You don't take any counter trend trades against overall trend. With a J signal, I'm allowed to take a corrective counter wave, and I'll show you how to do that in a second. It happened on gold just now, a second ago. So the bottom line is that you're allowed, if the moving averages are down, when you first log in this trading room, look at that magenta moving average. If it's angled down, you know you're in a trend market. The market's been trending about 3 out of 5 days in 2015. You get chopped 2 days and you trend around 3 is what we've been averaging pretty much every week. So this is a trend market, meaning on the black charts, there's no way you take any longs since 4 o'clock, actually 3:30 a.m. this morning. You don't take any longs off the black charts at all. The black charts are only with retracement trend, retracement trades, period, off the number one and number three. That's it. You don't take any counter trend trades against these moving averages. Never. Off the black charts. You never do it. I will show you in a second on this video how to do the J signal corrective wave, meaning a counter wave. You never take a counter against the overall trend. So what it is, we logged in and we noticed that the magenta moving average is angled down. If it's angled down, what you want to do is look for the first retracement to either volume profile, which is more volume based to the bottom left chart, which are the red dots. Red dots will be high value area to short. Green dots are low value area to buy. Or you can look at price profile, which are the red dots to sell if it's in a downtrend, green dots to buy, or green hedge to buy if it's in an uptrend. So what we do is we play off of the profiles on price or volume. It doesn't matter which one it hits first, just as long if they're within 10 ticks of each other, you want to pick the outer edge one. That's how you decide which one you take. But if I hit volume profile first, then I'll take it with a pull-in bar. Or I've hit price profile first in a downtrend on a retracement, I will take it with the pull-in bar with the maximum 15 tick stop. I'll show you how to do it. So what we had just over 60-40 was volume profile, and you had 60-66 was price profile. So the first one we came to was volume, but we never got a pull-in bar, and I'll show you. Then it came up through price, never got a pull-in bar, and it came all the way up just under the hedge. You're allowed to exceed profiles intra-bar. These are 5-minute bars. You're allowed to exceed them, called the wick, As long as you get a pull-in bar, why that bar is ticking. But you cannot, if it closes above profile, before you get a pull-in bar on the 3-sim Renko, you cannot take that short. So you can see it's called a straddle. It's where a lot of novice traders that know nothing about wicks and how to trade wicks or straddles. It's how the professionals take the amateurs' money on profile. Well, we're smarter than that. We're more educated. We know we're allowed to break through profile, and we're allowed to straddle it, meaning you're allowed to tick above it, just as long as you don't get pulled in over here, okay, before it closes on the next bar. So you can see this bar, this wick called the exact high because of this pull-in bar. Now, here's what happens. You do not want to buy or sell the pullback on these profiles, price here, volume based down here, unless you come within 2 ticks of these profiles, maximum 3 ticks. If you're too far below it, more than 3 ticks, avoid the trade with the pull-in bar. So if you look, let's take a look at it. Let me blow this up for you, and I'm going to show you how we do this. As we moved up, look at my Renko bar. As we moved up, let me show you where the 2 profiles were. The first was right here. Profile was right here. The second profile was at 66. So there's my 2 profiles right there. Here is price. Here is volume. Now, typically, you'll just come up to it and get a reversal bar within a couple ticks of it. But today, we had a big push because it's a shark bite trade, and I'll show you why. As we come up, right here, you want to play off of a spinning top or a doji. That's the only 2 bars you want to play off of for a pull-in bar. You must have a pull-in bar on my number 1 trade. The spinning tops will be blue. The doji will be a plus sign. I ignore the green bars. I ignore the red bars. I only want to play off of a doji or spinning top. So when we hit price profile, we had no spinning top or doji, and even if we did right below it, it never closed below the wicks. Look how we never closed below the wicks on those trades. Never closed below them. You need a body candle close below, not the wicks, below the doji or spinning top, never close. As we move up, we come into what's called price profile over here on the black charts. Look how we never closed below the doji. Look how we closed below the wick right there. I mean, we wick. We never closed a body of the candle close below or close below it. Then we come all the way up, the 5 minutes still ticking, and we get a beautiful doji at the top. Now we get a body of the candle that closes inside of it. And what this does is that's our entry technique. You want to pull the trigger on that. You want to sell the bid. Don't do market orders. Sell the bid. Don't sell it at the market. Sell the bid. You're going to pay a 1 tick premium, but you're not going to get an extremely bad fill. All right? And you have a maximum 15 tick stop on the number 1 trades. All right? And look at that nice trade that we had this morning. That's the number 1. That's called the exact high off my methodology. Look how it pushed through both profiles, but you never had a pull-in bar. That's why the pull-in bar is very, very accurate. Very, very accurate on number 1 trades. Typically, you'll just stop right inside a profile and reverse, which we really like. It's got to come within 2 ticks. But you must have a pull-in bar. Why do I call it a shark bite? If you go to www.daytradingthefutures.com, you'll see we have a big shark as our emblem. Why? I've been trading this since the mid-1990s on this, and I used to do it with stocks when I was a small order execution trader called you probably got guys heard of So's Bandits. So's Bandits back then, we had a beautiful time back in the day in the 1990s. And we used to play right against the market makers and also the floor. And it was great because we saw trades like this set up in the stocks just like the futures all the time. Why I call it a shark bite is this. If I got a long-term magenta down, longer-term moving average down, and my shorter moving average right here gets out of alignment, look how your magenta is angled down, but your smaller moving average gets out of alignment from it. It's no longer running parallel with it. Look how it's going vertical straight down. Once I get that hook, I called it a shark bite for a reason. I named it for a reason. Notice it looks like a big shark opening its mouth, the smaller moving average. Look at that versus the magenta. It looks like a big, even a seagull. I guess I could have called it a seagull, even better than a shark bite. If you look at it, you see that's the bottom of the mouth right there. Look at the moving averages get out of whack. What happens is you get these moving average traders that know really nothing about the markets because moving averages are worthless. You can't buy and sell off of them. If you think you can buy and sell off moving averages and be consistent, good luck. Because I've never seen one trader make money, and I've seen thousands of traders make that come to me in and out of this room, and I haven't seen one make moving averages off moving averages. You don't know which one it's going to stop out. 250, 34, 20. I mean, it's crazy. A lot of these software programs out there use moving averages by and sell off of, and they're worthless. They're lagging. You can't do that. Market profile, however, has worked for 30 years. It's worked for 30 years because that is the order flow of the market. It's true support and resistance. So I use moving averages for trend direction. And what I noticed is when I get the smaller moving average get out of alignment with the longer, I look for retracement to the first test of profile. And there's my beautiful profile here, sitting here and here. And once it gets up to it, it catches all those novice moving average traders because we're hard alignment down. They're thinking we're still going south. The professionals are smart, like myself and you. We know that the professionals are going to drive it straight back up, take all the amateurs out that are trend followers or moving average players or moving average convergence divergence players or players that are just trading off lagging indicators. They bring it all the way back up to profile, and then we get a pull-in bar right at the high. That's called a number one. Number ones are trend retracements on the first retest with market profile. The shark bite trades are the best when you get big alignment like this. I mean, alignment gets out of whack. There it is. Look at that. That's how you trade a number one. What a number three is with trend direction also. A number three is we don't buy LV if it comes down to it. If it would have broke 59 or 59.60 down here, I would have let it break, retest 59.60 within 2 ticks, and got a pull-in bar for a number three. So that's how you do a number one, number three off the black charts. Very, very simple. J signal, go over to gold, Gerald. J signal's gorgeous. Okay. There's only now J signal, so there's only 2 trades on the black charts. With J signal that works on your own Ninja charts, there's only 1 trade. Gerald, are you able to encompass the whole chart here? Let me see if you can get it. So you see a corrective and motive. Let me see if you can get it real quick. This is very important for those guys to see this. Can you get that? How about that? Is that okay? All right. So with J signal, it's different. We only have 1 trade set up. Only 1 trade setup you need to know, and that's called a number 3 setup. Okay. With the J signal, it's different than the number 1 trade. I don't have a number 1 trade on J signal, because the number 1 trade is a deep retracement with overall trend pullback. What the J signal does, it's a continuation trade. It's trying to catch a lower high or a higher low. Okay? So it gives me the exact bar entry just like the black charts do, but I can trade all markets on my J signal all by itself. You don't have to have the black charts and J signal match up because they're 2 separate methodologies. Okay? The number 3s are the same, but there's no number 1 on the J signal, just a number 3. So if I look at it, there's 2 wave patterns to J signal. Okay, we got 2 wave patterns. There's one setup called a number 3, which is a lower high or higher low. Here's my number 3 short. Here's my number 3 long. Whoops. My number 3 long happened this morning. All right, but there's 2 wave patterns you need to understand. There's what's called a motive wave, and there's called a corrective wave. So here's a short, here's the buy. The best trade you're going to get with J signal, the best one you're going to get is when you break out of LVA down below, if 5-minute trend is down, you retest LVA and you don't close back inside of it. You're allowed to come up to this black line called the line of sand, but if you stop right on profile and you're allowed to break it through the wick, but if you don't close back inside this profile and you get a J signal entry, which I got double arrows here this morning, that's the best setup you can possibly get with J signal. On the 5 sim and 3 sim Renko, I trade off 2 time frames. 5 sim off my larger time frame and 3 sim. The best trades you're going to get with J signal if you break outside a profile or you break just back inside a profile for the first time. The first break retest is the best. Okay? Now, here's how you do it. You break LVA if 5-minute trend is down. That's called a motive wave because it's with 5-minute trend. You're allowed to take corrective waves, however, counter trend trades with J signal. right? You can't do that on the black charts, only with trend. But with J signal on your own charts, you're allowed to take corrective waves only if you get back inside of LVA if you're in a downtrend. So this one, it was a motive wave. You can clearly see you broke outside of LVA, you retested it, beautiful double arrows, meaning major order imbalances, and it tanked. Gorgeous. You're allowed to take the counter wave only if you get back inside a profile. You get back inside a profile here, that tells you the market is strong. You're allowed to take the first retracement long. There it is, and it nailed what's called the corrective wave. So the motive wave number 3 is with 5-minute trend. The corrective wave is against 5-minute trend if you get back inside of LVA or HVA. That's the only time you can do it. Now, I have a zone I like to do, and this happens. I just talked with someone yesterday about this. We had a meeting yesterday. Clay, hope you're doing well. And I had a meeting with him yesterday, and we talked about the zone trade. The best time to take your corrective wave is off of the session lows or session highs. Gold was at the session low, and I call it session after midnight, and it got back inside of LVA, and it gave me the first retracement. If you get inside my zone of 62 to 76% from that session low, just wait for a big blue triangle, take the low, take the high. If you get a J signal that stops right inside there, you got the prettiest setup on a corrective wave. And it happens all the time off session lows, session highs. I see hundreds and hundreds of charts where it will nail the session low or session high with J signal. That's how great this thing is, right inside my zone. Because the zone tells me that the market is strong. It only retraced a maximum 76% retracement from its low, and my J signal got the blue fib dots with an entry. That's the best corrective wave you can take. And motive waves the same way if you get a 62, 76% correction. But the corrective waves are gorgeous. That's how we do it. J signal, remember, right here. Let me light this up for you. Make sure we understand this. J signal has 2 wave patterns, but only 1 setup. 2 wave patterns with 1 setup. That's it. Here it is. It's called a number 3 trade with 2 wave patterns. Motive waves with 5-minute trend, corrective waves against 5-minute trend. Price must get back inside of market profile, LVA or HVA first, then take the first J signal retracement. Session highs or lows are best for corrective counter waves inside of my fib zone of 62 to 76%. And guys and gals, this is the same J signal setups have been working for 30 years. Just one setup has worked for 30 years off market profile, because we're letting market profile set the trade up. We're letting J signal, my Fibonacci, right, pull back with my Elliott wave entry, order imbalance entry, get us in the trade. All right? Do we need an arrow, a triangle to get in every trade? No. As long as you take if no arrow or triangle comes up, as long as you're breaking outside of LVA or inside and you get a pull-in bar, you're allowed to take the trade. Only when you're breaking market profile, though, on the 5 or 3 sim. Then you can take a 5-minute pull-in bar, even off the line in the sand. All right?